Okay, so I'm going to get this started. I know we're waiting for some people to join, but it will be recorded anyway and uploaded immediately after. So, yeah, I've posted into the SCAP Spaces chat just a quick Word document of some talking points to go to. I want to keep this one short and sweet, and then as stated, I will follow up with another one around 20-30 minutes once we have the Fed rate decision and the consequential meeting from that as well. So let me just try and share my screen quickly. If somebody can let me know this works. I've not actually tried this just yet. Trading workspace. Screen. Yeah, so this is the first time I'm trying this and hopefully it works. So somebody can just confirm if you can see my screen right now. That would be great. And drop me a little line in the... You can see it, perfect. Can you see this Word document?
Yes.
Okay, perfect. So yeah, I think for this one, let's just quickly run through, of course, the election, which, you know, we stated a number of times how we thought that would play out. I must admit, I didn't expect the results so quick. It was an absolute landslide. You know, the people have had their say, and ultimately it falls in line pretty much with what I expected. The Democrats were not running on enough to convince the people. You know, I think they were banking on women turning up for the vote in droves, in much larger numbers, to ultimately vote for abortion, which is, if you think about it, okay, it's a touchy subject, but I think personally running on a campaign based on that is pretty ridiculous. And as we've seen, the Dems have just been flip-flopping. They didn't stand for anything in terms of policy throughout their campaign. So to me, it was no surprise that Trump got the victory. It was just the speed and ferocity in which it happened was actually quite surprising. So we'll just run through these talking points. Very, very interesting. The markets have reacted pretty much as we expected, and we could see a lot of it getting priced in before the results were even announced. So here's an interesting one. Very interesting. So this was the single largest one-day election market pump. 1.62 trillion in wealth added to US stock markets, S&P 500, US 30, Bitcoin. We saw Bitcoin pumping, I think only around 2 or 3 hours into the results being collated and reported. And I think from there, it was becoming very obvious who was going to take the victory. So on the back of that, as you know, stated before, we discussed this, Trump is, if he sticks to his word and his campaign, which is widely expected that he will do in line with his previous 4-year tenure, then we can expect tax cuts, tariffs to resume. So just to touch on them, which for the record are both inflationary measures. So with the tax cuts, we expect that to be 21% corporate tax. So that's very positive for businesses, both domestic and abroad. So, you know, it's foreign investment. It's a lot easier for, you know, some of the big CEOs to go into Geneva, into Saudi Arabia and invite investment into the USA. It's a very, very attractive tax rate. And, you know, if you remember what the Democrats were saying, talking much, much higher, and then also talking about taxing unrealized gains, which I think nobody wants that. In my mind, it's a crazy, crazy idea. So we can expect tax cuts. We can expect the resumption of tariffs, which again is very positive for the dollar, because that encourages people to, one, manufacture it domestically, create smaller businesses. Again, there's a lot more optimism. I think over 50% of the US economy is dependent on small businesses for job creation. So, you know, when you start to try and push them out of the market, it's really bad news. So I think there's a lot of optimism in the USA right now for a number of reasons. We can expect a lot of deregulation, which is, you know, very, very positive for the US market and the US economy, because regulation, of course, prevents a lot of things happening. It prevents a lot of growth. There's a lot of red tape, so difficult to get things done. And that ultimately puts a lot of businesses off, as I say, domestic and foreign. So again, I would say that's a huge net positive for the US market. We still have interest rates to discuss. And as we know today, we have the interest rate decision from the Fed. So I've got, very keen eyes on that. We'll come on to what I expect from that in a minute, and the course of action that I would imagine to see. So right now, the dollar is still very attractive, and it is going to increase as well. I think we're going to see a lot of dollar strength from the quote-unquote Trump trade. So the difference in global interest rates from the major central banks at the moment, that is still a huge point for how attractive is the US dollar. So right now we still have interest rates fairly high compared to a lot of major economies. So if you compare it to the Bank of Japan, I think their interest rate's sitting at 0.5%. And we discussed this on the last call, how the yen carry trade was very much just a constant and a guarantee for so long. Although that's been reduced with the interest rate hike in Japan, there's still a huge differential between the Federal Reserve and other major central banks. So that is a huge point of attraction for investors, foreign and domestic. So I think that remains in place. And although we are cutting rates, I do believe that will slow down quite heavily now. If not, it could actually come to a halt. I think we see 0.25% today, or they turn around and say we're actually putting the cutting cycle on hold momentarily, and they may continue at the next Fed meeting in December. So we have also been focusing heavily on the jobs market, the labor market recently, because that is a huge talking point and it's very important. I know a lot of the focus has been on inflation, but we still have to have a look. Say again, I can't hear you too well. Repeat the last. Can you just type it in the chat? I can't really hear you. Perfect. Are you speaking to me, or it's somebody in the background? I can't really hear too well, sorry. If you're speaking in the background, if you could just mute your mic, that would be great. So yeah, let me just get back to what I was saying. So with the jobs market, it's actually holding up very well. When we see the unemployment rate, that remains very stable. Wages and earnings also remain very stable. So that indicates that the market is holding up very well. It's still very resilient. We had a lot of talk of the recession, hard landing, soft landing. Personally, I think the hard landing, I never really saw that as an option, because I think if the Dems had won, we'd be having a different conversation right now. But it seems there's a lot of optimism, as mentioned a few minutes ago. And when I look at this, the labor market data, jobs, unemployment rate, wages, earnings, there's no real cause for concern there. And coupled with the GDP growth that we see printed month on month in the USA, I think that's very positive, to be quite honest with you. So very interesting. I think, as I say, without repeating, there's a lot of optimism right now. We still have uncertainty in the markets for various reasons, and I will come on to that in a minute. But I think a lot of that has subsided with what's gone on this week. And so the US dollar is still in very high demand, and it still acts as a safe haven for investors, banks during times of global uncertainty. So to touch on that, we still do have the conflicts raging around the world. I do believe Trump will address the Russia-Ukraine conflict before we see any huge developments, negative or positive, in the Middle East between Israel, Yemen, Iran, and any other parties that may or may not get involved. So although we've seen, as discussed, I think in the previous call or the one before that, for the first time, really, we've seen the dollar pumping and gold pumping. And so we put that down to the fact that although the US dollar is still very attractive, I think there was a lot of caution surrounding that heading into the elections. And gold will always outperform in these times of conflict and uncertainty as well. So I think until we see actual settlements of these conflicts, the first one I do believe will be Russia and Ukraine. I would expect Russia have pretty much taken what they set out to take in February 22, was it? The war started, I believe it was around February the 24th, the initial invasion. And as it stands, we don't hear too much reported on this war. for various reasons, as much as we used to say a year ago, is kind of just going on in the background. But Ukraine are losing around 10 to 12,000 soldiers a day. And I do believe there's one of two ways Trump will bring this to a, I won't say end, but I think it will become to a resolution, and we will still see some tit-for-tat skirmishes, etc. going forward. But I think, first of all, Trump stops the funding to Zelensky and to the Ukraine, in which case they're fucked. The only reason they've been able to wage this war or, you know, put up any sort of defense resilience is the arms provided from the US and the loans. So when they say they're taking loans, 60 billion, however much they take each time Zelensky goes to Congress, that's effectively a credit note for US arms. You know, most of the arms they're using are produced in the USA, so ultimately that just circles back into the coffers of the US economy, and more so the neocons, warhawks, which, you know, we can get into another time. I don't want to go too far down the rabbit hole, but war is the number one racket in this world, and it benefits a small group of people to keep these arms flowing. So very interesting. I think that's why we saw a lot of resilience from the left for Trump getting back into the White House. And again, we can go a little bit further down the rabbit hole another time on all of that. But for the time being, I would expect him to peel back on funding for that war, and ultimately a peace deal where Russia will, in fact, take swaths of Ukraine. I think at the moment they stand on around 20% of the official Ukraine land, which Russia argued is historically Russian. There's a lot of Russian people living in there. So ultimately, I think Putin and Russia get what they went in there for. It's taken a long time, a lot longer than they would have expected. But ultimately, the Russian war machine has just kept grinding on. And I think they will get exactly what they want out of that. So moving on to this, a lot of the dollar strength was priced in. We saw a rally in the DXY. I'll pull the charts up in a minute and we can have a look exactly how the markets have reacted, how I expect them to look going forward, and how we can position ourselves in the long term, medium term, short term. Again, I did state the other day, there has been opportunities, and I hope some of you guys caught them. The gold short specifically, we spoke about that, and that pretty much erupted immediately as the results came clear. So a lot of that has been priced in, but I still see a lot of room for growth in the dollar, as for the reasons mentioned above. I think it creates a perfect storm. And that does not mean that, you know, we can't see pushes in gold and other assets. And again, I will come on to that. But I do expect today, I don't want to predict, and I don't think it makes too much difference. I think the markets have been pricing in a 25 basis points cut, but it would not shock me whatsoever if the Fed do come out today and announce that they are not cutting rates. So what else did I want to discuss on here? So we've gone over tariffs, and, you know, I've given my 2 cents on what I expect from the Fed today. And so ultimately, this is a good point to discuss. So although Trump has won the election, we do have a few months now between, you know, 2 months there or thereabouts until his inauguration. So I would expect the markets to remain slightly cautious. But when we do see Trump back in the White House and we see the implementation of his policies, I think we are going to be into a full risk-on environment. You know, that would include S&P, US 30, crypto in particular. I'm keeping a very keen eye on BTC right now. It's very interesting. We've discussed this before also, how much of a quote-unquote safe haven is BTC. And I guess you see that through difficult times. It's upheld very well. And for me, it's becoming a great indicator of confidence in the markets. And I do think come January, we see somewhat of a super cycle in the crypto space as well. And if you guys would like me to start including some crypto information and some of the opportunities that I've been investing in or I'm looking to invest in, including altcoins going into the second half of 2025, then I'm more than happy to do so. I discussed this with Sean. I can just create a new channel and go over some information on there if any of you guys would find that useful and you're interested in that. So they're the talking points. They're very brief, and I will elaborate on all of these when I drop the reports into the fundamental section. Also, we'll give a bit more context to this following the Fed meeting in around an hour and a half as well. So I do aim to jump back on it around 4:30 my time, so in 2 hours, or maybe at the time, and then we can watch it together, see how we interpret it, listen out for any clues, see what the mood is, and ultimately look how we can move on the back of that. But I would not expect any big surprises today, to be quite honest. As I say, if they don't cut the interest rates, I've kind of already factored that in. So without pointing the obvious, so we came down. This was discussed as well on the last call. I had this level marked on around 2640. We did pull into there, and I took a trade from around 2730, not long after Sean had posted it post-election. So I was a little bit late. I was hoping to get in here, but again, I did state that I thought it to be very risky until we got some clear direction. And now ultimately we are seeing this bounce back, as you would expect, you know, as mentioned, until we actually start seeing some of this de-escalation in conflict and implementation of policies. The markets are going to still remain cautious, and there would have been a lot of buy orders in around here. So ultimately that played out very well. I closed my shorts around 2655, so I didn't catch the entirety of that move. I left 100 pips on the table, but I was more than happy with what I'd taken from that. I'm also still holding longs from around 2490. I have deleveraged somewhat from that position as it's moved along, just been taking, you know, partials as the moves unfolded. So with gold, I don't expect us to pull all the way back into the highs, to be quite honest with you. As I say, I do expect to see more dollar strength, so gold can come and retest these levels, 2730, maybe come and test this channel, which is a local trend. It doesn't really mean too much to me, to be honest. So I'm not waiting for it to tap into here and short. It's very basic. So we have this zone here. Oh, bear with me. We've breached back through here, so I would expect we come and test this zone again, and I will be looking for further shorts. However, anything can happen, as I say, between now and January the 20th. I would be surprised if anybody really takes the risk of making bold moves. Now it's confirmed that Trump is back in the White House. So interesting. I'm still holding the longs and looking for intraday shorts as and where they present themselves. But for the time being, I did not enter here. I should have, but I didn't. It is what it is. So as we saw, wow, incredible. You know, we're touching 6,000 almost. That was a very, very strong move. So that just goes to show, you know, the markets do have their say ahead of fundamentals and data. And the market is fairly risk on right now. I mean, BTC absolutely flying. It really shows no signs of stopping. I wouldn't be surprised if we start by January, February, pushing into mid to high 80s. Oil, this was spoken about, I think, around a week or two ago. I was waiting for a pullback into this region before starting to scale in some longs. I was tempted, and I stated in the group that I was not entering here after this gap, but I was waiting for a push back into 67.50, 67. So I scaled into 2 or 3 positions. I've actually closed one around here, and I'm still holding the other 2. So I'm going to reanalyze this. I think oil very interesting. I'm waiting for some more direction from OPEC, from the US, you know, because one of Trump's big policies is that he wants cheaper energy, because ultimately that is going to, the high prices of energy in the USA at the moment affect everybody. You know, in the households, businesses more so, everybody uses energy. So I think that's a big positive. So I'm not really long. I know I stated that I would be looking to hold up into $75 or potentially even 78.80, but in light of recent events, I've reconsidered my game plan and approach around oil. So yeah, for the time being, I am still holding 2 positions on this, but I'm considering, you know, de-risking and booking profits on this over the coming days. So there's the markets. I know Sean, he will give you guys more in-depth breakdowns. Technically, I just wanted to give a quick roundup of my thoughts on what we've seen post-election, how I see it going for the next month or 2. And then from there, I think we're going to have some very clear market moves. And ultimately, I think if we do see the de-escalation and we get the inauguration out the way with a smooth transition, then ultimately I do think we can start seeing a big pullback on gold. and I will share updates with you guys, how I plan to manage them positions, where I'm entering, and ultimately the game plan going forward. So I think it's a huge, we have one hurdle out of the way now in terms of the election. It was a peaceful and swift election as well. You know, there was people complaining that Kamala didn't come out until the next day and concede, but that's not really a great concern. It was a very, very peaceful transition, but as I said, a lot can happen between now and January the 20th. As we've already seen, there's been a number of attempts apparently on Trump's life, and I wouldn't expect that to stop personally. I don't wish anything on the guy or anybody, but I'm keeping an eye on that because anything can happen. There's a lot of angry liberals out there right now. So yeah, let's keep an eye on that. That's just my thoughts on the markets post-election, how I see it moving forward. And then we'll catch up again following the Fed rate cut announcement and ultimately that meeting. We'll be listening to that to see if there's any clues from Powell. I would expect Powell to be very cautious with the new administration coming in. I'd imagine he wants to stay in his position to keep his role as the chair of the Federal Reserve. So I'm sure he will be trying to appease any policy or, you know, any economic ideas that Trump has going forward. So today, very interesting. And, you know, we will catch up after that and just have a quick roundup. But if you guys got any questions at all on the back of that you want me to run over, or any thoughts, any theories? If so, just quickly type them into the okay, I'm on the wrong thing. Okay, so drop them into the SCAP space. Cool. Sorry, go ahead.
No, you're good. I'm new here. So,
welcome.
I'm just trying to, I guess, kind of like pick up some information. I'm not so much, I guess, like involved in, I guess, but I did want to figure out, I guess, who it was that I was supposed to talk to, as an administrator or whoever else that it was that I was supposed to talk to, just, I guess, kind of answer my questions. It's not necessarily related to trading, but more so services.
Okay, you can drop me a DM after this call if you like, and we can go over any question you have there. You can, so just to confirm, you can reach out to me, Sean, or Dan. We're the three administrators in here, so if you reach out to any of us at any time, you can get your questions answered. But I'm more than happy to have a conversation with you after this if it's not relevant to trading.
Okay, and I guess, like, what's your, like, handle or, like, username?
So can you see the one at the top of this?
I got you.
Perfect. You may need to add me as a friend, but I don't think so because you're in the group, so it should just work. But if not, then I'll message you first, so it works.
Yep, I got you. I'll send you a message right now.
Okay, perfect. Yeah, and then I'll follow up with you after this call.
Alrighty, thank you.
No problem. Anytime. Any more questions, guys? Because I will keep this one brief. I can stay on for another however long. And then, as I say, I do want to jump back on following or during, you know, I can screencast the speech, we can watch it together, I can drop a bit of commentary as we go through and see what we can pick out from there. I think the volatility will still remain, to be quite honest. I think we'll see it slowing down, and I think we will now just trade in larger ranges, to be quite honest with you. So in terms of volatility, we will still see that, but I prefer much larger ranges, as you know, I've stated before, much easier to trade. And I think ultimately we'll see it calming down. As I say, it depends what happens geopolitically. Within the USA, I wouldn't expect too many surprises now, to be quite honest with you. As I say, it's been a very peaceful transition, much more so than I thought. And I think that's very calming for the markets as well, because a lot of the uncertainty was based around who was going to win the election. If you were to take away the conflicts that we've discussed, that's still a huge point of contention. There was clearly not much confidence in the current administration, i.e. Democrats, Biden, who knows where that guy is. So I think it's been a huge calming effect for the markets, and I do think we are going to see huge investment into the USA and particularly the US dollar. So I would expect we start to see a lot more clarity. But that being said, I would say we've had a very good run with the likes of gold. It's been very easy to trade in this bull run for quite a while now. So I do expect us to see volatility, but I expect there to be larger ranges created, which, you know, gives us many opportunities to trade in either direction. As we know as traders, we like volatility, it's our friend, and, you know, we want to take advantage of that. So yeah, to answer your question in short, I do think we will see fair amount of volatility through November and December, and then as we head into January, February, I think we're going to have some very interesting markets. But yeah, I think it's going to get much easier to trade going forward, although it's been fairly friendly in my opinion. Any more questions, guys? If not, I'll cut this one for now, and then I'll aim to jump back on in around 1 hour 25 minutes as we go through the Federal Reserve meeting. Okay, cool. I'll leave it there for now then if there's no more questions, and I will drop a quick message into the trading workspace just to confirm the time I'm jumping on again following this. Okay, thanks guys, I'll speak to you soon.